Ladies and gentlemen, welcome back. This is Christopher Aaron. It is May 6, 2021. This is the iGold Advisor channel, and we are going to pay close attention here to the battle for 1800, which is underway right now when we study the gold market. This 1800 level is really key, not just for what's going to happen over the next couple of weeks, but I think what's going to happen over basically the remainder of this calendar year. This is going to give us a pretty good roadmap as to how quickly gold could try to move its way back toward the previous all-time high. What we see happen here just below the 1800 level. So the analogy that I would use is 1800 is similar to in Braveheart, when you have all the forces lined up on either side of the battlefield here. And on the far side, you have the King of England, the King's men, right? Super well-trained, well-fortified, much larger army, with all the entrenched tools that the kingdom had. And here on the other side, you have the rebels, you have the freedom fighters, you have the liberty lovers, and those people that did not want to be oppressed, right? So when we look at this and we draw the analogy to the gold market, I think both of these sides are set up on either side of the 1800 battlefield here, and it's just going to be absolutely fascinating to see whether the lovers of sound money and sound currency have it in them at this point to clear that 1800 level, or whether the bullion banks and the central banks are going to be able to shove it back down once again here as they have over the last couple of months. So let's take a look at this battle that's ongoing here, really key for the next few months. Make sure to hit the big red subscribe button, and while you're there, hit the bell icon so that you will be notified when these free videos come out on YouTube. So we're talking about gold. Let's take a close look at the near-term price action. So notice on Monday shown in the turquoise and Tuesday shown in red here. Just look at this. Notice how the sellers showed up both times. We're talking within $2 to $3 of the 1800 level. So clearly a very important level. They are, they're digging their heels in over there. You got buyers clearly stepping in here in the mid to upper 1700s. And you have sellers digging their heels in just below 1800. They do not want to see that 1800 level closed above. Absolutely not. Let's have a look as to why. Now, you're going to see it on the charts here. So I don't want to annotate everything here. This is the long-term chart. If you would like to take a look at what all the trends mean, please pause this video and take a look at our color key here and notice how some of the trends line up. For example, remember the peak in 2008. Notice how once that was broken, it served as support here in 2009 and then support again in 2015. So there's nothing random about the fact that when you have a broken significant peak, it then acts as support, right? So similar kind of thing. Let's take a look at the resistance here just below the 1800 level. Notice resistance, resistance, resistance. And then as we've been climbing our way back up, notice that after this 1800 level was broken, it acted as support here back last year. This was October of last year, but then it was broken lower and is now once again acting as resistance as it did back here in 2011, 2012. So you definitely have some people out there that are trying to paint this entire red shaded box. In other words, everything from the coronavirus on, they're trying to paint this as a top, a significant top, similar to the 2011 to 2012 time period. And now, so there are certain specific things that we need to see to negate the possibility that this could become, let's say, a long-term top and then lead to a 5-year bear market as it did from 2011 through the end of 2015. So let's zoom it in here and talk about the battle that's ongoing. Now, the first thing that I want to draw your attention to, so remember, the black double lines here, that's that level. We're talking 1790 to 1802. Functionally speaking, let's call it just below 1800. The first thing that I want to draw your attention to, though, is notice the downtrend from the absolute high. This was the all-time high in gold set in August of last year, $2,074. Notice connecting the major peaks, this second major peak in gold at 1960. Notice these peaks in here, and you had a intra-week move above the downtrend, which then failed. So clearly the trend was still being respected here. You can notice the trend still being respected in here. You can notice even over the last 2 or 3 weeks, a couple weekly attempts to break that downtrend, all of which failed, right? Except right here. Notice, so now it's only Thursday morning going into Asia, but as we're speaking, gold is approaching 1790. So there's still 2 more days. There's still plenty of time for these banks to try to, press the price of gold back below the downtrend, which would come in at 1775. But for a moment, let's assume here, and this is what I was hypothesizing about in the premium update going back a few days ago. I was thinking that it was going to be this week in which gold finally pops this primary downtrend going all the way back from 2020, from the all-time high. So that would be a nice initial signal that these lows in here in February and March were in fact a more significant bottom than just, let's say, an intermediate term bottom. If we can see this downtrend break, it doesn't mean that the price of gold has to skyrocket immediately, but it starts to show you that the downward momentum is really losing it's losing its power at this point. Back to the Braveheart analogy, it's like the first line of defense here for the bears, for those people trying to keep gold down. The first line of defense is being broken through as we speak. So very important to see 1775 held first. But then we want to talk about, what was the title of this video? It wasn't the battle for 1775. It's what I think is even more important here, the battle for 1800. Remember, this level goes all the way back to 2011, 2012. Remember those previous peaks from 2012, right at 1800. We can notice here that this zone acted as support here back last year. It was then broken, and so you would expect this zone to act as resistance again. So trust me, they're trying to keep the price of gold. Even if they let this first line of resistance go, the downtrend, they're trying to keep this 1800 level under wraps for now, okay? So at this point, you have to say, all right, it's one thing to talk about what we might hope is going to happen. It's one thing to talk about the fundamentals. Yes, we know all fiat currencies are losing value over the long run, which means gold should rise over the long run. But clearly, gold does not have to rise every day, every week, every month, or even every year, right? There can be significant counter-trend moves, multi-year counter-trend moves. And so what we're trying to do here, back to the battle analogy, is not just look at, what training the two sides of the battle had, not look at what sort of weapons they have and, what their background is, but what is actually happening on the battlefield itself. What is actually occurring and what's the highest probability for an outcome based on what is occurring. Not what we hope is going to occur, but what is actually occurring. So as I said, the first line of defense is, we want to see the weekly close here above the downtrend. Let's assume that we get that for a second. Let's assume that we get the weekly close above the downtrend. What then is going to happen in the highest probability sense is that the 1800 level, they're going to hold it right at 1800. And we should get something like this, something like a bit of a mini, maybe another week or two of tests to get above 1800. Maybe even a brief daily spike above 1800, but then a failure to hold it, and then succumb to selling pressure again. Now, here's where it will be. Once again, this is the highest probability based on the observable data, the what is actually happening on the battlefield. This is what we actually see happening as far as observable support and resistance levels. So I would not be surprised to see gold back off here. Now, the thing is that over the course of the rest of this month, let's say gold backs off, there will be support then for gold at the broken primary blue downtrend, also at these former peaks here back from February, March, this congestion zone in here at about the 1740 to 1745 level. So I think a lot of people will get mixed up right in here. If this in fact works out, I think a lot of people are going to get mixed up right back in here at the 1740, 1745 level. A lot of people that are sort of weak hands will probably sell, and then gold will find support there and will once again move its way. Now we're talking into June, move its way back to the 1800 level. And perhaps after, I'm talking a very, very short back off there again, just to convince some people that see 1800 is going to serve as a long-term top forever, then gold will finally blast its way through. We're talking, mid-summer, mid to late summer, if this scenario in fact plays out. So the key for right now is the 1800 level. Back off, support, tiny back off again, blast through. If that happens, we would then expect to see, once we get back into some of these peaks around 1920, remember this was the previous all-time high from 2011, we would expect something of a notable, maybe $100 correction there late year, followed by the stronger move late this year into early next year to get back to the former all-time high, eventually to exceed the former all-time high. So the key that we're watching right now is the 1800 level for a weekly close, especially, I would like to see 2 weekly closes above 1800, 1802 to be precise. Let's say that gold surprises us here. Something comes out of left field and the interest in holding gold back on that side of the battle, on that side of the battle line. Let's say they fail to stuff gold back below 1800 again. And let's say we get the pop here and, gold starts closing at 1830, 1840. This will be, I made the point in the beginning of this video that what happens here at 1800 tells us really what to expect for the rest of this year. Is it going to be more of a consolidative, 1.5 steps forward, 1 step back kind of move, over the course of the next year to get back up to previous all-time highs? Or if we can break 1800 now and get perhaps a tiny little back off here in the mid-1800s, I think we're setting up for a much stronger advance and a much quicker advance to get back to the former all-time highs. It's not to say that there won't be a nice $100 pullback somewhere in here, but it is to say if we can get this breakout above 1800 now, I think you get that little pullback sometime in the third quarter, $100 pullback, scare some people out, and then you get the real strong move that we're anticipating. It's just you don't get it in the beginning of 2022. You get it here, in the third and into the fourth quarter of this year, perhaps August, September, October. That time frame tends to be pretty powerful for gold, historically speaking. So the real key here, guys, once again, is what happens at 1800. We want to look for weekly closes. If gold succeeds here above 1800 for a couple weekly closes, it's showing me that we're going to have the stronger move, the quicker move back to all-time highs. If gold fails here, I think it gives us that retest of the boundary, the downtrend, followed by delaying this move into 2022. Okay, so what happens at 1800 is critically important for how soon, especially if you're investing on any leverage, or if you are considering, do I finalize my physical gold purchases now? Do I wait for one more pullback? Watch very closely what happens at this 1800 level. Especially, we want to see 2 weekly closes to confirm it for us. If you would like to follow this kind of analysis with us every single week and get the moment by moment answers as to did gold break out or not, was this legitimate or not, and not wait for these free videos to come on YouTube, know that we publish in-depth analysis, even more in-depth than what you're seeing here, every single week for premium members on the iGold Advisor website, and that service is called Precious Metals Intelligence. Not only do we publish premium videos like you're seeing now, but we also cover silver, the US dollar, the US stock market, and the rest of the commodity complex. We also cover the exact leveraged gold and silver miners that we are buying and selling here, with special flash updates going right to your inbox when there is anything related to the precious metals markets from this technical standpoint that you should be aware of. If you would like to speak to me one-on-one, please know that I do voice and email consultations with individuals across the precious metals spectrum. There's nothing too big or too small. We work all the way with complete newbies. You know, if you're just beginning and you're saying, I wish there was someone who didn't take fees or funds from any of the mining companies or any of the bullion depositories, someone who is fully independent in this sector and can just help guide me, well, I would like to offer my services to you in that respect. Similarly, if you have a multi-million-dollar portfolio that you're looking to diversify within the sector, we take clients such as you as well. We sit down and we discuss it over with as much detail as you need to make the best executions for yourself. We cannot guarantee which way the market is going to go, but we do have a fairly reliable roadmap here, as you can see, that we are following. And this helps us to keep sane. It helps us to evaluate probabilities. It helps us to really, understand where those points are that the powers that be might try to smash gold back in the other direction. And why don't we get ready for that if it is a possibility at a certain level, as opposed to always acting like victims. So once again, thank you for those people who are supporting this channel on Patreon. It means a heck of a lot to me. Make sure to hit the subscribe button. Watch 1800 here, guys. Plus or minus a few dollars. We want to see 2 weekly closes in a row. My best take on it is that it won't do it right now, but I would be pleased to be wrong in this case because I think we're ready. I think we're mostly invested here. We've got all of our positions lined up. If you'd like to find out more what our positions are, make sure you check out Precious Metals Intelligence. But we're ready. I just want to say the highest probability is that we've got a bit more grinding to do before 1800 gives way to those central banks and those bullion banks that do not want to see the precious metals regain their true status as monetary reserve assets.